All right, good morning, traders. We've got some diehards in here. Last trading day of the year. Before I get started, I'm going to say thank you, everyone in the room. They're not only, you know, members of the trading room, but your friends and family. So it's been a lot of fun. And as you know, we're just going to commit to one more year. Um, and I just want to thank everybody for your participation here. All right, well, let's take a look at this last day of the year, right? Let's see what we have unfolding. So yesterday was really a quiet market. I mean, and rightfully so. Through my years of executing for institutions and uh, having a lot of long and short funds and Paul Tudor Jones, all these big traders and funds that I worked for, um, they really pretty close up shop most of the time 2 weeks before the end of the year, clean the books up. So, this rally I think was a little bit the Santa Claus rally, usually is more retail than anything. So we've got this consistent, rounding top almost right here, right? And you could see on the very top of this rally, we kind of came to a little bit of a price overlap and some trying to balance maybe a little bit. Well, let's take a look at yesterday. I hate to remind you of the pain. Look at this. This is probably one of the smallest ranges in this month, but you could see the chop, right? So when you see this kind of market, just talk about this for a minute. We always do a little review here, but I just want to remind you that when you see a bell-shaped curve like this structure, point of control through the middle, you can see this 30-minute bar chart that we have with all this price overlap, the body of the candle staying within the value area. So not an easy market to trade. When you see these bell-shaped curves, all you could do is sell rallies, buy dips, and uh, when there's no large institutions to push it and get something going up or down from here. Now, with that being said, um, you could see some profit taking. You never know. The last day of the year is kind of a wild card, right? If you look at the ES here, let me bring up the ES, right? We've had this big rally balanced a little bit right around this pocket. And then we had this nice push out of it, a little balance, and here we are. So you might see a little bit of that. And remember, going into the last year, there's all kinds of different um, reasons why the market might do what it does, right? We've had this rally. We're making new yearly highs every day this week. Um, and usually, right, when you see that in the past, after 46 years of doing this, um, a good portion of the time when we're making new yearly highs right into the very last end of the year, you might not see any profit taking until the beginning of January, just for the fact of um, having to pay capital gains this year. That's just one factor. But you can see we're slowing down in momentum. We're still in a PAV buy. It's been like this for now 2.5 weeks. And you can see just on the 310 oscillator, we're starting to roll a little bit. Um, so there could be a chance that they might try to take them a little lower off the opening. Uh, I feel like you don't want to get too married to either position, on a day like today, because it is a crapshoot. We could break them down. We tested the U.S. session lows this morning, right? during Europe. Europe pretty much took out the previous U.S. session highs and almost just about taking out the low, which is the U.S. market today, right? So if we do get below 27, let's say, um, there's a good chance we could take it down to 48.19. That was a pretty important level, still is. And even if we got down to 48.11, you might catch a rally back up. So I think you could have some two-way trading going into this last day. So we'll see. You can see it's a little bit fragmented, which means there's a lot of indecision, as to be expected this time of year, last day of the year. And as we are on our 2023 highs, not the 2022, we still haven't taken out the all-time highs, but this is the high of the year. All right. So my pivot for me is this 28.37. It's a point of control from the overnight session. It also came in and it respected it first during Asia. It's the top of the value area from the US session. And it's pretty much close to the top of this day from Wednesday's high. Okay. So it's pretty important. I think that's the flip zone. If we get back above it, we're heading up, and we might take out 48.42 and head for 48.51. So we could do either or. Right now we're balancing, so the market's kind of neutralizing at this point. So we'll wait for the first 15 minutes and see what it wants to do, right? As you can see here on these volume candles, we're starting to die a little bit around this area before the opening. 9:45, we have PMI, Chicago PMI, or you can say PMS. Anyway, and we'll see what happens. Right? Okay, let's go on to the next chart here. Let's look at this crude. The crude broke down yesterday. The big level was the 72.70. If we close below it, that would be a little dangerous. We could start a leg down, and two closes below would confirm it. If they get back above this 72.70, 80 area, that's possible that might be just a test reject that we had. But it's looking like the market might have another revisited low of the lows of the day. So you could see here, this was a big level for me, right around 72.60. Yesterday's close was 72.70, which is more important for me. So unless we get above 70, and 80 is my pivot, I would be looking for another revisit of the lows in the crude. Okay. This high here was that I circled. That was the 200-day SMA, and we went up to it, missed it, just tested it, but fell shy by about 15 cents. And then now the market's kind of still pushing lower. So I do expect this crude to get down to test the 70.50 area, the inside pocket, 70.30. That would be what I'm looking for, unless they do a little bit of a save here, which I think it's going to be hard for the market to rally back above 72.70, and 80 being my pivot. So let's just see what happens. Okay. But going back to this market profile, you can see how it panned out yesterday, right? When we broke this 72, 70, 75, the market peeled off single prints and could not really bounce, because that level was a big pivot for me, and it is today. So currently, the overnight markets rightfully so, are kind of quiet because it's the last day of the year. And you could see how we're trading inside the overnight highs and lows. So if we take out the lows, um, hang on one second here. So if we take out the lows of the day, which today the overnight lows come in at 71.62, I think there's a good chance we're going to get down to that 70.30 to 70.50. All right. All right, let's look at the next chart here. You've got this gold. The gold, the EC, and the bonds have been kind of correlated, and so you're seeing this on all three of them, where the market had a nice run up, and now it's starting to push back down. My pivot is 2082, which was a pretty big area. It's kind of the inside pocket here, the top of this area where the market tried to uh, get a little bit more of a breakout, could not sustain it. We had a bull trap here, the overnight session, made a higher high of this US session high from Wednesday. And then we opened up, and this was a big failure for us not to get back in and fill this or take out the overnight highs. And that's why the market sold off. And it's continuing to push down. We have no gap. So this 68 is a pretty big level. It's previous point of control. We just poked and did a little test reject. If they get below 68 and take out the overnight lows, that comes in at 2067.60, pretty close, then we could be on our way to fill this gap. All right. When we look at it just on a regular chart here, you could see a little bit of a channel that we're in, and we're heading towards the bottom of the channel, and that comes in right around that 67.68. So they break that, maybe we can move down and test the daily EMA comes in at 20.50.40. So I don't know if we're going to get that kind of a push today. The markets are going to be a little bit on the quiet side, I think, for most of the markets anyway. But we might get a little profit taking from this rally. Don't forget, we came from 1987, which is only like a 2-week low, and rallied all the way up to 21-ish. So that's quite the rally in 2 weeks. So we could come back a bit. All right. All right, let's take a look at this EC. And you can see the EC had a pretty much greater rally in as far as momentum than the gold, but did the same thing. Overnight sessions made new highs here, and this happened to be on Wednesday night, took out Wednesday's US session highs, but on Thursday failed to even take out the US session highs, or even, and of course not taking out the overnight highs. That's a bull trap usually. And then we got this big sell-off. This morning, I left this gap shaded in so we can see that where we filled the gap here. You can see that brown, but we didn't quite get down to test this overnight lows, right? So the overnight low was 110.79. Now, if we take that out, I think we can go back to the previous month high of 110.70.50. All right. When you look at it here, it's going to look just very much like the gold, but we had a much greater, sharper rally, but we're still in this up channel. So we could catch a little bit of a break. We take out the lows of the day, or I should say the overnight lows. All right, well, let's look at the bonds. And the bonds did what we were talking about on the wrap up yesterday, I said a good chance that the overnight markets are going to push into this gap. And that's exactly what we did. We went right to it, filled the gap in the overnight markets. Um, and now kind of doing the same during the US session. It's more of a confirmation if the US session fills the gap. That's why I left this in. So far, we've traded pretty much near the high of the gap, and we might come down and do a complete test in this in the bonds of the lows. The overnight lows 124.09, right? Pretty much '08 fills the gap completely. '09. It's possible we get down all the way to this high volume note of 123.30. We'll see. But I wouldn't expect, you know, too much, but I do think we're going to test this poor low and get down here and at least test 124.09 before we go higher. So that's my 2 cents for those markets. Let's go back to the original drawing board here, see what we're doing here. You can see we're getting a little bit of a rally here in this this crude. So this 72.70 to 80 is going to be a big number. When we get up there, if they hold up and then they start to back down, that might be it. Now, on the other hand, they might try to continue this if they get above 72.80. And if they did, it would be like a little bit of a test reject. All right. You can see we're kind of in a little bit of a triangle here in the ES, just waiting for the opening. And the NASDAQ doing some price overlap too. So let's wait for the first 15 minutes before we pull the trigger today. I think that's what you need to do. We'll see where we open. Currently, this crude opened up and did a little spiral, a little coiling in the morning right around the opening 8 o'clock reading, and then took out its first 5 minute high. And so the 72.60-70, let's keep an eye on it. If it starts to fade, get a little fatigued, there could be another push back down. If they get above 72.80, that would be pretty impressive. Then we can continue to rally. I think it's going to be the opposite, but we'll see. All right, so we have the last day of the year. For those who wanted to sign up for the special for the year that we're just going to keep for the end of this year, and that's the 1 year deal. You just go to tradershighway.com or talk to Kyle. Those who already signed up appreciate it, and then for those who are in the monthly or the 6 month, we're happy that you're still with us. And so let's have some fun. I think we're going to have some great volatility next year. There's just so many markets that are kind of extended and moving. And the first month is always kind of volatile. So volatility is great. It's for me, it's more fun because you have more opportunities, right? When the markets are quiet, you have more fake outs because everybody sees the same breakout, right? So, all right, let's just get ready here for the opening. We got 7 minutes to the opening. We get some coffee and let's rock and roll this last day of the year.